Hi there, and welcome to the latest numbers in the Wellington real estate market. It's Adam Cockburn here at Lowe Co. We're looking at February 2021 versus February 2020 for the Wellington region. Let's get straight into it. In summary, the market remains absolutely outrageously hot, and in fact we have seen the highest 12-month price growth in Wellington region according to the Real Estate Institute New Zealand House Price Index for the second month in a row. The highest yearly price growth for the second month in a row. So it remains very, very hot out there indeed. So if we look at the median sale price to start with, up 24% from February to February, 890,000 in February 2021 versus 718 in February 2020. Now, going back to January, I think the median house price growth was higher than that at 26 or 27% from memory. But if you look at the numbers, you'll see that in the previous 4 months from February, the numbers were hovering around 800,000, and we've pushed well through that in February 2021 to 890, so getting close to the 900,000 mark for the first time ever, significantly over the 800. So even though the median price growth is less February to February than it was in January to January, that just shows you how erratic the monthly numbers can be, because the February result was like 10% higher than the January result itself. So nonetheless, either way you look at it, it's very strong price growth, and on the 6-month moving average basis, pushing 800,000 for the first time ever as an average of the last 6 months. So in summary, price growth continues to be very, very strong. And if we look next at the house price index, which is probably the most reliable indicator of actual underlying value growth that strips out the variations caused by a different mix of properties being sold from month to month. This is what is the most staggering result, and that is a growth of 29% from February 2020 to February 2021. January to January, we saw a result of 26%. That was the highest house price index growth over 12 months that Wellington has ever seen since the numbers started back in the early 1990s. And the very next month, February, we're seeing higher again. So the highest ever 12-month rise for Wellington for a second month in a row at a blistering 29%. So very strong price growth indeed. How many properties are being listed in Wellington? February 2021, 779 versus February 2020, 802. So a small drop of 3%, hardly noticeable one way or another, pretty even compared to 12 months ago in February. Number of sales, 727 versus 790 a year ago, February 2020. So that is quite a reduction of 8% there. Is that because demand is coming off? The price growth would not suggest so. Perhaps what that is a reflection of, again, is maybe just a constraint in the number of houses available for people to buy. But either way, down 8% in terms of the number of sales on a year ago in February. It's taking 29 days to sell a property in Wellington in February 2021 versus 30 days in February 2020. So a slight reduction. Again, is it significant? Probably not one way or another, down 3%. So it's about the same as it was a year ago, which is low compared to the long-term average for Wellington. So it's not taking long to sell property in Wellington, but about the same as it was a year ago. If we look now at the inventory we've got on the market in terms of the number of weeks worth of supply, we're at 7 weeks in February 2021 versus 12 weeks back in February 2020. It's obviously a big drop of 5 weeks or 42%, but it's the same as it was in January, and it's actually higher than it was in December or the 4 months prior to that. So more supply, more inventory than we've seen in the last 6 or 7 weeks, but less than it was 12 months ago at 7 weeks for February 2021. Number of Trade Me listings, we're continuing the same trend. It is low compared to 12 months ago. 1,126 in March 2021 compared to 1,610 in March 2020. That's a drop of 30%. So we have seen a slight increase in number of listings on Trade Me over the past few months, but that is absolutely normally the case because as in summertime the number of listings does increase typically, but the increase we're seeing is really subdued compared to 12 months ago, 24 months ago, and so 30% fewer listings compared to 12 months ago. And in fact, if we look back to February 2019, 2 years ago, it is almost half what it was 2 years ago. So certainly on the supply side of things, it is short, it is hard work for buyers out there. Supply is very, very short indeed. So in summary, folks, we've seen the highest 12-month house price growth for the Wellington region for a second month in a row, highest since 1992 when the numbers started. That huge growth at 29% over the last 12 months. New listings are about the same level as they were 12 months ago. Sales volumes down slightly compared to 12 months ago. Duration to sell is low. It's short time to sell properties in Wellington, but roughly the same as it was 12 months ago. Inventory levels are down compared to February 2020, but higher compared to the last 6 months. And stock levels, the number of listings on Trade Me, very, very low indeed. Folks, the market is still very, very competitive. It's difficult for buyers. It's great news for sellers. The same line I've been using for the last couple of months. What I'd like to finish off is a question, and that is, it's clear this market is extremely strong. How long can it last for? That's the $1 million question. There's no doubt, 100% it will come to an end, but when? And obviously I don't know, and nobody does. But I'd like to look at some of the results from Tony Alexander's surveys in the last month or so. And I've got 4 results here, and I'd like to start by looking at the one on the top right. This is saying how many agents around the country are reporting it is a seller's market versus a buyer's market. Now, obviously, the vast majority of agents are still reporting that is a seller's market at over 70%. But if you look at the trend there, going back to May last year, the trend is that it increased. More and more agents were saying it's a seller's market. But over the last 5 months or so, the number of agents saying it's a seller's market has plateaued. So they're still saying it's a seller's market, but it is not increasingly so. If we look at the next one, bottom left, are investors bringing more or fewer properties to the market than 3 months ago? So this is again looking at the trend is more important than the actual quantum. And for the last 9 months or so, or 8 months or so since June last year, the vast majority of real estate agents are saying fewer properties are being brought to the market by investors than 3 months ago. There are less and less properties coming to the market by investors. That trend has turned now in March, and more agents are saying that investors are bringing properties to the market than are not bringing properties to the market. So perhaps a bit more supply coming on in terms of investment stock at least. Is that reflective of other stock? Don't know, maybe, maybe not. And the next one is the net proportion planning to spend more money on investment property. So this is on the buyer's side of things. And if you look again, the result very, very strong. More people planning to spend money on investment property than to divest themselves on investment property. But the trend in March is much reduced compared to the months prior. So are these early signs of a slight changing in the market, a slight cooling down in the market? Who knows? We will see, but I just thought it might be of interest to see are there some early signs that the market might be cooling down a little bit. Even if it is, 95 degrees is still hot, just not as hot as 100 degrees. So I hope that's interesting. If you need any advice on your properties or want to reach out, you know how to get me. Adam Cockburn here at Lowe Co. Thanks for checking in. See you next time.